It's been a fairly decent week in the stock market despite the sell-off we saw on Monday leading up to worries about the Trump tariffs of Canada and Mexico as well as China. There were a lot of fears about these tariffs in terms of causing more inflation and lower growth. However, the good news, it looks like that these are postponed for now because it looks like both Canada and Mexico will be putting some of their own troops to help secure the border and make sure that there's no drugs or fentanyl coming through. And it looks like that's pretty much what Trump wanted all along, those security guarantees and more border enforcement, at least with Canada and Mexico paying for that and really utilizing more of their troops. So that security guarantee pretty much is what he wanted, and he's willing to postpone the tariffs to see if it really gets implemented and it works out. So it looks like these tariffs all along were more of a negotiating tactic. This is very similar to what we saw in Trump's first administration with the Canada and Mexico trade agreement. He threatened tariffs, and then ultimately that didn't happen. He got some more security guarantees about the border, and there ended up being a pretty comprehensive trade agreement. I think that'll likely be what happens now. You know, the market was fearing the worst, that it would cause inflation, that, you know, it would lower growth. But, you know, the market, at least for now, the fact that it's postponed is taking, this as a breath of fresh air. Obviously, let's see what happens. There's still 10% tariffs on China, and China kind of retaliated too. So let's see what happens with that. But on top of that, we also had Trump pretty much say he wants to create a sovereign wealth fund, which could be pretty good for the U.S. economy. Obviously, we have to see more about that. And David Sachs, Trump's crypto and AI czar, had a press conference the other day pretty much saying that, reiterating that that could likely happen, and that a Bitcoin strategic stockpile may actually be involved in such a sovereign wealth fund. Obviously, we have to see. He wants to pass comprehensive stablecoin legislation and help Congress do that. And it looks like he's really trying to spearhead a lot of good development in terms of trying to get legislation in terms of, what cryptocurrencies or securities or commodities and so on and so forth. So it looks like there's pretty good positive developments in the crypto space. Obviously, we have to see, but the crypto market's kind of sold off at first because, they said that we're looking and evaluating whether a crypto digital stockpile is worth it. The fact that we said looking and evaluating, the market sold off because the market wants action. They want to see, okay, why can't we do it now? You campaigned on it. Why can't we do it now? So that's why the crypto market sold off, in my opinion. But overall, these developments of trying to create comprehensive crypto legislation, a sovereign wealth fund, and looking into a digital asset stockpile or Bitcoin strategic reserve is overall good for the sector. It's healthy and it's kind of what it needs. And then Treasury Secretary Scott Bessent had an interview with Fox Business yesterday pretty much saying that, him and Trump aren't necessarily trying to pressure the Fed to get, the Fed funds rate down. What they're trying to do and more worried about is getting the 10-year bond rate, the 10-year bond yield down. And I think that's the better course of action. To the 10-year bond yield, if that goes down, that'll likely spill into lower mortgage rates, lower credit card rates, lower auto loan rates. Those rates are really influenced by the market rate of the 10-year bond yield, not necessarily by the Fed fund rate. After the Federal Reserve cut interest rates by 100 basis points late last year, the 10-year bond yield actually went up about 100 basis points. So it's more important for the economy to really have a lower 10-year bond yield because that number filters into, as I said, mortgage rates, auto loan rates, and lower credit card interest rates. And a lower 10-year bond yield also usually does well for stocks, especially risk-on stocks like tech stocks, small cap stocks, and crypto should likely do well because of that. So that's another bit of good news. And then I wanted to talk a little bit about earnings. I'll make this quick. Palantir had really good earnings. Their commercial segment was up 64% year over year, and their government segment was up about 45% year over year. Palantir's operating on all cylinders. I wouldn't be surprised if Palantir hit $1 trillion market cap over the next couple years and really compete against, Salesforce. They're the software component of AI that businesses and the government are using. And I think Palantir has really grown a lot because of this, their strong software. And on the other hand, Google was down a little bit. Google was down about mostly because of the missing revenue, and they're spending $75 billion on AI this year, and that is a pretty large amount of spend. And I think that investors got spooked because they're hoping that amount of money that Google is investing in could translate into revenue soon. Google shareholders aren't convinced, so that's why Google went down. And then lastly, AMD, a key competitor to NVIDIA in terms of making AI GPU chips, announced their earnings, and their stock went down pretty considerably, considering their data center revenue was less than expected. So overall, we had a mixed tech earnings bag the last few days. The beginning of the Magnificent Seven earnings were pretty strong, especially from Apple and Facebook. And the market even reacted to Tesla's earnings pretty well, even though they missed on their earnings and revenue, partially, as I said in my earlier video, that Tesla was working on implementing full self-driving and their robo-taxi unveil in Austin, Texas in June. So the beginning of the week, we had a good reaction to tech earnings. The past few days, not so much. Palantir was up a lot as well, but that earnings report was a couple days ago. So obviously tomorrow we have the jobs and unemployment report for January, and that'll be very huge to see where the market goes next, in my opinion.